Hello and welcome to today's daily analysis for the 22nd February 2024. Starting off with dollar index, the dollar slightly dropped below 104 on Wednesday after the Federal Reserve meeting. Despite a strong US economy, the Fed is not keen on cutting rates, shaping expectations for a delayed easing cycle. In the Asian session, the dollar faced selling pressure, hovering around 104. The investors are watching for clues about the Fed's rate cut plans. Technically, the dollar is struggling to find support, with a narrow expected trading range between 103.71 and 104.70. If it goes below 103.71, it might test lower levels, and if it goes above 104.7, it could aim for higher levels up to 105.74. The current low volatility makes it tricky for the dollar index to make big moves. And then for the crude oil, due to an attack on the Israeli cargo ship MSC Silver, claimed by the Iran-backed Houthi militants, the US vetoed a UN resolution for an immediate ceasefire. On Wednesday, the US WTI crude traded around 77. The oil prices dipped due to a profit taking, but could be supported by Middle East tensions. The International Energy Agency lowered its 2024 oil demand growth forecast, impacting prices. However, geopolitical inflicts might counterbalance demand concerns. The oil traders will watch US inventory data. Technically, the WTI crude tests a crucial level near the 200-day moving average at 77.47, but stayed above. The medium-term trend is upward in an ascending channel. Further bearish momentum could test to 76.45, 74.07, and the 50-day moving average at 74.10. On the upside, attention is on the 78.50, followed by the 79.15, and potential tests of 80 and 80.94 if breached. And then for the gold prices, it held steadily after the recent Fed meeting, suggesting no rush for interest rate cuts. The dollar dipped slightly, and gold, trading around 2020-30, saw 50-day gains, almost hitting 2030, close to a key level. The investors are keen on what the Fed says about the rate cuts, affecting both the dollar and gold. Many expect a rate cut before mid 2024, keeping the dollar weaker and supporting gold. Technically, gold looks strong, bouncing back from the 1985. It might go up to 20,040.30 and 2061. If it drops, there's support at 2014.5, 2000, and the 100-day moving average at 1997.60. And in the AUD USD faced mixed trends due to the global market changes and commodity performance. Initially rising for 6 days, the Australian dollar got a boost from the Reserve Bank of Australia minutes, signaling a potential hold on interest rates. The declining US dollar also helped. However, after Wall Street's fall, the S&P ASX 200 dropped for 2 days, potentially impacting the Australian dollar. Despite mixed data on the wage price index, it had minimal impact. Technically, the Australian dollar started the week at 0.655. Breaking below may find support at 0.6516 and 0.65, with further targets at 0.6442 and 0.46. On the upside, retesting Tuesday high at 0.6579 may lead to a resistance at 0.66 and 0.6606, followed by the target at 0.6656. For the pound, it gained momentum after the Federal Open Market Committee meeting minutes, reaching above 1.26. The positive remarks from the Bank of England Governor Andrew Bailey about the UK economy and potential rate cuts boosted the pound. Bailey acknowledged rate cut expectations, but hinted at recovery signs without specifying a timeline. Currently at 1.2625, upcoming events like the US S&P Global PMI release may impact its direction. Technically, on the daily chart, breaking above 1.2667 to 1.2673 could push pound to 1.27 and 1.2772. Support is at 1.2570, 1.2603, and 1.26. A break below may retest at 1.2548 level from February 16. Next, for the Japan yen, it might go below 150, checking support at 149.81 and 149.50. It's influenced by uncertainty about Japan's interest rates and a weak economy. The yen is getting support from the talks and shaky stock market, while the dollar is being cautious. Rising US Treasury yields could keep USD Japan yen from dropping too much. Technically, it's a bit uncertain, but if it breaks above 148.7 to 148.8, that's good for the bullish side. Going past 150 and 150.85 to 150.90 could mean it goes higher. On the flip side, if it drops below 148.92, it might find support around 147.85 and 147, which is an important support level. For the euro, it went above 1.08 because of the US dollar didn't bounce back after a key meeting. People are cautious before important data comes out. The euro got stronger as the dollar got weaker, with investors thinking the US might delay cutting interest rates. Technically, the pair has been going up, crossing 1.08 for the first time since early February. It might face resistance around 1.0826 and 1.0838. On the downside, it has support at 1.076 and 1.07. The EU reported surplus of 31.9 billion in December, up from 22.5 billion. And that is all for today's analysis. Thank you for watching.